Hey everyone, and welcome to another minisode of the investigation game. During our time at home, Leah has been creating free webinars every week that are filled with amazing information. So we thought for these next few weeks, instead of our usual minisodes, we would give you all the shortened version of the webinars. If you find them informative, feel free to join in on the full-length live event, or if you missed one of the older webinars, we post them all on YouTube. I'll be sure to attach the links to our events page as well as our YouTube page in the show notes. Stay safe, stay healthy, and we will see you soon.
All right, so today we're going to talk about how is cash used. Last week, we talked about that cash can be stolen in two ways, two broad ways. As it comes into an organization, a business, a nonprofit, it really doesn't matter. But coming into an organization and how it leaves the organization. So today we're going to talk about how it leaves the organization. We're going to identify some different data sources that'll just help us walk through this process. We're going to talk about the best data sources and just some of the easiest things to do with these data sources. So you don't have to think, oh my gosh, there's a billion reports I could run out of this company. You can really just go to a few things and find what you need. I promise it works every single time. Really, the majority of the cases we work with the exclusion of payroll, because payroll also, is a way that cash leaves the company, but we address that in the first week of these webinars. But really, these are some of the most common ways. How is cash used in an organization? We have operating expenses. So if we understand what the operating expenses are of a company, for me, that's rent, some internet, some a telephone, right? So it's pretty small. In another organization, it could be something much larger. They might buy equipment. They are going to pay payroll, more than likely. We have cost of goods sold. So are they manufacturing? Are they, creating widgets or different things? And then what are all the costs that go into creating that? Sometimes we're going to pay taxes. Hopefully the owner has a salary or distributions, and hopefully there is profit. So if we understand how all of this money leaves, then we can know how to go back and quantify what's missing. In an organization, if all of these items that I've listed are already spoken for, so rent has to be paid at the first of every month, payroll has to be paid, let's say twice a month, your vendors have to be paid for your cost of goods sold, taxes definitely have to be paid. If all of these things have to be paid with cash, then what is the piece that a fraudster is stealing? They're stealing your profit. It can go on for so long because they're stealing your profit, which should be your reinvestment to then grow and all that. So you don't necessarily notice it until you're out of profit and then you're out of money for rent. And that's when owners call me and say, oh my goodness, something is wrong with cash. When beginning an investigation, we're going to identify the specific risks in these different areas. Okay. And most of the time, business owners come to us or with their attorneys and say, okay, we know that they're stealing this way. But then we still like to walk them through, okay, what else does this person have access to so that we can identify the risks and determine, are there other areas that we should also look at while we're concerned with writing checks to themselves, fake vendors. Then we need to remember that we have to identify who benefited from the allegations. Business owners come to us and they'll say, we know that they were taking money this way through false reimbursements, right? They'll say, but also we heard they're doing X, Y, and Z. Well, we have to identify how they benefited from X, Y, and Z. False reimbursements make sense to me, but this other situation you're telling me about, I don't really see how they benefited. So not that we're not going to look at it, but we also need to make sure that whenever we're putting our scope together, we're thinking about fraud has essentially two parts. We have to show intent, but the primary focus of a fraud investigator is to prove benefit. We're going to prioritize the client's areas of concern based on these risks. And then we're going to identify data sources that allow us to look for who benefited. So sometimes, especially if there's kind of a gray area, who benefited from these credit card expenses? Or how do we know if these credit card expenses are good or bad? What we like to do is actually approach it and ask and answer the question, who benefited from this transaction? Was this a transaction that benefited the business, or was this the transaction that benefited the employee? And a lot of times that helps us just kind of get out of the, oh, this is a good transaction, this is a bad transaction, but focus on who benefited. If someone is stealing money, it will show up on a bank statement. Now, They could steal inventory. They could steal parts. They could steal supplies. They could steal equipment. Those are asset related. We're not talking about that. We're talking about cash transactions. They're going to pull cash out of the bank, not take an asset and then sell it and then they, blah. All of the things we're talking about today will show up on a bank statement. Just because something looks weird in the accounting system, it doesn't mean that there's fraud until you've identified the cash that someone could have taken to casino, could have gone shopping with, could have, whatever. Now, stolen money also leaves through payroll, like we've talked about, and it also leaves through credit cards. You have your cash account, and it's going to show all of the payments to credit cards, but those are going to be lump sum payments. Then you have to go to the credit card statements to actually see, okay, did those transactions benefit the employee? Did those transactions benefit the employer? That's where you get that detail. Because just because they made credit card payments, that doesn't necessarily mean that that was a bad transaction like we were talking about earlier. Once again, we have to look for who benefited. And a lot of times we do this by working with the client and the attorney because the client knows their story, but we know data. So we can put all of this data into a format that the client can easily digest, and we can work together to identify, okay, this is a normal business expense and this is not. But what we're going to look for, same as with ghost employees, we're going to look for duplicate EINs, duplicate addresses. We can do the thing where we take the address, the numbers in the address, the street address, and we can concatenate that with the zip code. Another thing just that we can do is we can take the employee master list and then we can combine that with the vendor master list to see, is anyone being paid as an employee, but then also as a vendor. You can run that on addresses. You can run that on socials, EINs. The point that I want to make about whenever we're looking for these things as ghost employees or looking in vendor files is that we want to make sure that we connect the data or the anomalies in the data to actual payments on the bank statements. Because just because we have an anomaly in the vendor file, that doesn't mean that cash has been stolen. We have to show how that connects to cash. And usually you're going to find that, like we talked about, on the bank statement. If you haven't noticed by now, bank statements are my favorite source of data. And I'm going to show you an example of how to organize a bank statement to identify some potential issues. This is kind of a cleaned up basic version of a bank statement schedule. That's what we call these. And we like to include the bank name, the account number. We usually give some sort of account reference. We make sure that we have a relevant period. We try to identify that at the beginning, which that's something that I didn't do till later in my career. And man, that'll just save everything if you can just remember to ask for that relevant period. Also, we like to make sure that whenever we've scheduled everything, that we tie it out to the bank statement, to the total of all the bank statements. Does that, do our total deposits and total check amounts tie out to the bank statement? We give every spreadsheet a line number. We have our account name, our account type, account reference. We have our statement date. Statement dates, just for a second. So the statement date is the date that those transactions cleared the bank. If there's a check written, then obviously there's going to be a lag most of the time between the check date and the statement date. Sometimes we do schedule the check date in certain situations, just if we think that that would be helpful or important. Whenever you're looking at a bank statement, if you're going to run like the days of the week, like we've talked about before, you're going to want the check dates because you want to see when were those transactions happening instead of when did they clear. Because if you're looking for, we think they were writing checks on Saturday or Sunday, that's not going to show up on your statement data because the banks aren't open Saturday, Sunday. They're not processing those days. The first thing we want to do is really just organize this information. And the way we like to do this is by sorting by name. So what's our payee name? And we're going to sort that. And really all we're doing is taking this information, sorting by name, and then we're going to do something called subtotaling. We're going to subtotal by, let me get caught up here. So we're going to subtotal by name. So there's a function in Excel called subtotal. At each change in name is what you're going to select. You're going to sum, and then we're going to sum our deposits amounts and our expenditure amounts. You can look at this information summed by payee. Then I like to take this and just copy and paste this over to another tab. So the purpose is that we're going to create another spreadsheet where we're going to have all of the summarized information so that we can look for a few other things, but then also that we can provide the client with a summarized list so that they can help us identify, okay, we recognize these vendors, we don't recognize these vendors. One of the things we want to look for in vendor information are companies. We like to kind of just narrow this down for the client. If we just give them this whole list, they kind of get overwhelmed. So we like to just identify some things that maybe are of highest risk. So we've talked about even dollar amounts before, but one of the things we haven't talked about is filtering for any time a vendor name says Inc. or LLC. So one of the easiest ways to do this in Excel, just by filtering, like I've done here, and then type in Inc., and then that will select all of the vendors that have the abbreviation Inc. You can also do this for LLCs. What I wanted to show you earlier, I just got ahead of myself, is that you see how everything in this column says total? Well, you can highlight that whole column, do Control F to do a find and replace. And so you can just do a find for total, and that'll select all of those, and then replace with a blank. Just don't put anything in there. Then hit replace all. And that allows you to search that information. So we're going to search for Incs. We're going to search for LLCs. Once again, we could even go back, and in doing so, we're just going to highlight all of these things so that then our clients can identify that information and see, is that a company that they've done business with? Then we're going to do the same thing just by filtering and going through this summarized list to identify any individuals, because once again, it could be an employee getting paid instead of a vendor. It could be a contract labor person who maybe shouldn't have been on, receiving payments. So that's just another way to identify those potentially suspicious activities. So another thing that wasn't in the data set I just showed you, but another thing you want to look at are transfers and wires. Once again, that's why looking at the bank statement is so important. We're also going to review the audit trail like we talked about. I've got an example of an audit trail. So here's a couple of examples. First, I had this CFO and the accounting records were not reconciled, which that is super common. I know as accountants, it kind of blows our minds, but they weren't reconciled. And the bank statements were summarized just as we described. We just looked for LLCs, Inc., transfers, whatever. So we identified transfers to unrelated bank accounts on the bank statements, but they had not been recorded in QuickBooks. So if we had been recording this in QuickBooks, only relying on QuickBooks, we would have missed all of these transfers. By looking at the bank statements, we were able to identify the loss of $475,000. We could look at who benefited from these transfers. Well, we knew that the transfers weren't connected to the company, and eventually the CFO actually worked with us, so he confirmed that those were his bank accounts. But also, it gave us intent by looking at, okay, we can see all these transfers in the bank account, but we're not seeing them. He did not put them in QuickBooks. So he omitted those transactions, which is our evidence that helps our prosecutor get towards intent. I also had a COO, and we summarized the bank statements, went through that whole process, and we identified expenditures to really fancy clothing stores. And the accounting records actually showed that the expenditures were recorded as an asset. So it was recorded against various like fixed assets accounts and inventory accounts. Once again, and this was about $350,000, and that was just for the fancy clothes. The case is much bigger than that. But we knew that the COO was the recipient of the fancy clothes. There was no business benefit. It's not part of his job. And then the intent piece was helped, that piece was given more legs just because he hid the expenditures in the asset accounts so that the expenses didn't appear too high where the owners might have noticed. I also had an operations manager, and once again, by using that bank statement process, we identified LLCs that were not related to the business. And whenever we looked on the Secretary of State, those LLCs were actually registered to the LLC itself, which helped kind of give that intent piece some legs. And the operations manager received those payments. They were his LLCs. The LLCs had his address as the address, but the registered agent was the LLC itself, so that whenever we went to search for that individual in the Secretary of State, we couldn't find that easily. Like, we would have had no idea to look for these LLCs. The loss in that, just for that scheme, was about $1 million. So in credit card data, we're going to do the same exact thing. We're going to organize it the same exact way as the bank statement. We're going to create a schedule. We're going to look for payments. The only other things that I'm going to say on credit cards is that you can use the day of the week function. And because credit card statements have the transaction dates. So we automatically, in our credit card account schedule, looks just like that bank account schedule, but we go ahead and we include that days of the week formula so that that populates. You can also look at the locations that'll come across in your payee information. A lot of times it'll say, restaurant, Tulsa, Oklahoma. So we create a column of all the locations. Also, some credit card statements have the various categories, and so then that's helpful. We also like to look at the number, like do a count or a dollar amount of meals per month, because that seems to be one of the most abused things on a credit card. We also like to look at the location of an employee compared to the calendar. So that's why that location column is really important. We also need to make sure that any credit card payments we have, that they tie out to the credit card payments that we're seeing on those bank statements, to make sure the credit card statement we're looking at was actually paid for by the business. That's sometimes a link that's forgotten. So here's one example. We had this executive director of a nonprofit summarize the bank statements, and we identified some credit card payments, but the organization didn't have any credit cards. So then we were able to actually, one of the employees still had some copies of these credit card statements. And so then we scheduled and summarized the credit card transactions, and we identified tons of cash advances at the casino. And one of the things is that whenever the executive director would pay his personal credit card bills out of the nonprofit, he would hand his statements to his assistant and ask her to shred them. And so that helped with the intent piece. We had the assistant was actually the whistleblower and still had copies of those credit card statements. And also we knew that the benefit piece, that the executive director benefited from this because the credit cards were in his name and he was the one going to the casino, and that was a $1.5 million loss. We also had an office administrator who was using the credit card for legitimate expenses and also not legitimate expenses. And so the way that we kind of helped reconcile that, it's going back to the beginning. We looked at who benefited. So did the business benefit from this expense, or was this a personal expense? And so that's how we distinguish between the two. And we did that using the locations and also the weekdays to look at when were these transactions taking place. She wasn't supposed to work on Saturdays or Sundays. She should have been in the office this day, but instead she was traveling, those types of things, and helped us quantify. We found about $105,000. The intent on this one was a little more gray. We didn't have a whole lot of intent evidence on this one, but the office administrator wouldn't let anyone else enter her credit card charges. They entered everyone else's but her own, so she just maintained that control. All right, I think that's it.
The investigation game is brought to you by Workman Forensics. For more information on the business and its services, visit workmanforensics.com. Find us on social media on any social media platform at Workman Forensics. If you have any questions, comments, concerns, or topic ideas, please email us at podcast@workmanforensics.com. Thanks for listening.